How's it going? It's Rocky. Welcome to my channel where the content that I focus on is sharing my experience trading the E-mini futures and the micro E-mini futures. My goal really by releasing this content is that it helps me trade and improve because I can go back to the past and really understand what I did right or wrong. And also, my algebra teacher in middle school always told me that you only get better at understanding something if you yourself is able to explain it or teach it to someone in a simpler way. So that essentially is my goal by sharing my experience here. And please do not take any of this as an advice. You can just look at it as a form of entertainment purpose only. So the content I'm going to talk about today, I got this idea from one of the comments from someone following my channel. So a shout out to Common Sense Financial, is really understanding how many contracts I trade with. And also this will help you understand how many contracts of futures you're able to afford. And I think this is key in understanding this topic before you even attempt to trade futures, because it is a volatile instrument to trade. So I would really recommend that pay attention to the details that I'm going to share. I did release a previous content on this. Please check the link above, but I figured I'd do a standalone content just focusing on this. And I also have a few updates from there. So right now on the chart, what we're looking at is the E-mini Dow Jones Industrial Average, which is the YM. And if you've looked at my previous content, or if you're new, how I trade is, I use two charts. On the left is a time-based chart where it's 5-minute candlesticks. And on the right is a tick-based chart, which has 512 ticks. But I'm not going to go into the strategy right now. What I'm going to focus on is on the center here. So basically, there's a question mark on the left here. And this is just for Thinkorswim from TD Ameritrade. It may be similar from another brokerage, but what I'm using, TD Ameritrade's Thinkorswim. So for one contract of the YM, it's going to show you here that the margin requirement is $9,900. And the tick count, what that means is for every one tick move, you will either gain or lose $5. Essentially, you probably will focus on the margin requirement first, because this can be a very confusing number. You may be confused in exactly what that means. And if we look to the left here, under the option buying power, there's two numbers there. You have the stock buying power, and you have the option buying power. To make it easier to understand, it's really the option buying power number that you're looking at. That's what you need to reference to and how much you can afford. So one thing I do recommend is if you trade futures for that specific brokerage, I would do it specifically for futures only. That way it doesn't get confusing. If, for example, you had other long-term investments in there in stocks or bonds or in mutual funds or ETFs, it can really affect how much money you think you have based on the buying power. Just so to make it easy, I just use this account for trading futures only. And if we go to the monitor part, that's why I track my progress based on the cash balance. Because if you look here, my cash balance is $19,420.46. And if we look at our buying power, the cash balance is exactly what is showing on the option buying power. And that just to make it simpler, and that's how I like to track how much money I actually do have. The thing that you need to understand when trading futures are there are fees and commissions associated with it. And basically, you can do your research. Some brokerage are a lot cheaper than TD Ameritrade, but I've been asked why I don't switch, but I stick with TD Ameritrade because I like the charts, I like the studies here, I like the customer support that I've received from it, and it's just what I'm used to. I don't really want to reinvent the wheel per se to try another brokerage, because learning that system is a whole new learning curve that I have to adapt to. So now I'm going to share how much it is for the commissions and fees for one contract of YM. Ensure to disable the auto send first. market is closed right now. It's Saturday, so there's no fear of maybe buying a contract. But just to be sure, I'm gonna disable the auto send. I'm just gonna click enter one contract here, and you can see from here that for one way, this is for one way, the commission for trading one contract of the YM is $1.90, and the fees is $1.25. So there's just one way. So for round trip, you would double that amount. And essentially this $1.90 here is actually a number that I've negotiated with TD Ameritrade. This previously was $2.25, and you're able to negotiate with them based on the number of contracts that you trade. Now I'm going to show you what the numbers are for one contract of the MYM, which is the micro for the Dow Jones Industrial Average. And how this works is an MYM is 1/10 of a YM, or you can think of it as 10 contracts of an MYM is equal to 1 YM. So if we look here on the middle on our active trader, on the question mark, you can see that the margin requirement for one MYM is equal to $990, and for every tick move, it's equal to 50 cents. So if we were to change this number to a 10, then you would see exactly what we were seeing for a 1 YM, where it's $9,900 for the margin requirement, and for one tick move, it's $5. Now, this is an Excel sheet that I created to help me understand exactly how much it costs to trade. You can definitely do this yourself. Basically here, I'm listing the margin requirement for MYM, which is $990, and for the YM is $9,900. I've also listed here what margin requirement is for the MES and the ES, and the MNQ and the NQ in case you trade those. Since I know most people trade the ES, which is S&P 500, and the NQ, which is the NASDAQ 100. There's also the option of trading the Russell 2000, which is RTY. I've traded in the past, but it's not really something that I like to trade. And I've traded all these three indexes in the past. My focus right now is really just trading the Dow Jones Industrial Average. So that's what I'm going to talk about. So here, let's ignore this center section for now. I'm going to focus here. So as I mentioned, for the MYM, for every tick or every point move, you're gaining 50 cents. But for the YM, for every tick or every point move, that equates to $5. And then there's this terminology between tick and points. And before I confuse you with that, I'm just gonna go through it right now. So essentially for the YM, they move in points. So one tick is equal to 1 point. And let me just show you what that means. So for the YM, one move is equal to one tick or 1 point. However, if we look at the ES, the tick count is essentially equates to 25 cents. So one tick move is 25 cents. However, 4 ticks, which is 0, 25, 50 cents, 75 cents. So that's equals to 1 point. So 4 ticks is equal to 1 point. So both the ES and the NASDAQ moves the same way, which is the NQ, where 4 ticks is equal to 1 point. However, for the Dow Jones, there's no quarter. So really, it's just 1 point moves. All right, now let's go back to this Excel sheet that I created. And I have this row here, which I'm calling the sunk cost. And really the sunk cost is the cost to trade, including the commission and fees. And I like to subtract that to really understand how much I'm earning. So for the commission, as I showed you earlier, for the MYM, the commission is $1.90 for the MYM. And the fees for that is 27 cents one way. For the YM, the commission is also $1.90, which is what I negotiated from $2.25 to $1.90. But the fees is a lot more for the YM, which is $1.25. 25. And what we're going to do here is essentially, I have this number on the upper left, which is essentially the cash that I have, or my option buying power, which is $19,420.46. And basically, I just divided that, if you can see here. I just divided this number by this number. And that shows me that I can afford 19 contracts of the MYM, or one contract of the YM using the $19,420.46. Or if I want to, maximize my cash, I, in theory, could also trade one YM and 9 MYM, which sometimes I try to do. But as of right now, I'm just focusing on just one YM and scaling up to go back to trading 2 YMs. So let's go back to the sunk cost here. So essentially what I'm doing is the number of contracts multiplied by 2 times the commission plus the fees, because round trip, that's times 2. And there you go. So if I traded 19 MYM, which I do not recommend, you would be paying alone $82.46 in commissions and fees, which means that your break-even point won't be until you hit 9 points. So after 9 points, then you're making $3.04. So I'm just going to highlight that for our reference here. Let's use green. All right, so a bit of an Excel tip here for you. There's 2 ways of moving this formula that we typed to the right. One is essentially highlighting it and clicking on Control R, and there's our formula. Another trick is highlighting the cell, clicking with your right button on your mouse and dragging it to the right, and you'll get given you a choice: fill with formatting or without formatting. I'm going to do without formatting just because of the border lines. And there you go. So the formula is now there. So what does that mean? If I trade 1 YM, my sunk cost is $6.30. And essentially, I would need to just get to basically be up 2 points to get a bit of profit. So $3.70. And that's why I trade the YM. But wait, I know you might say, hey, that's not really equal, 19 MYM and 1 YM. So let me just make it more apples to apples here. If I change this to 10, so 10 MYMs equal to 1 YM, basically our sunk cost would then be $43.40, and it will still take me until the 9 points to have a bit of profit, which is $1.60. But hopefully you enjoyed that bit of exercise there, and really that's how I determine how many points I need to actually get a profit from my trade. And a little bit of something that I did here in the middle is, this is really how my brain thinks. So I broken it down to percentages. The prices you see here are the closing price for each index on Friday, June 25th. So the Dow Jones closed at 34,333. The ES closed at $4,271.30. Not sure where the 30 cents is from, but that's what the brokerage showed me. And for the NASDAQ, it closed at $14,339. And what I did here is really I broke it down to what 0.1% is, 0.2%, up to 1%. And really why I did this was, typically an index, based on historical numbers, it doesn't really go above 1% too often, except maybe this past few weeks, been crazy volatile where I've been seeing 1.5%. But anyway, this is why it's important to trade an index. I would really recommend just trading only one and understanding that one index, because jumping through 2 or 3 of these, more power to you if you can do it. But personally, I would like to trade only one, because you get used to the movements of it, and really how it reacts based on what you're seeing on the news. Now let's break down how much profit you're actually gonna make if, let's say, your goal for the day is exiting at 0.1% of the move from the previous close. So 0.1% for the Dow Jones Industrial Average would be 34.33 points. I'm gonna highlight that. Now let's go down the column here and let me just show you what 34.33 points is. Roughly, it's this one. So 34.33 points, if you were trading 19 contracts of the MYM, would get you $240.54. And that's already including, that's already subtracting the commissions and fees. And also, you know, if you were trading the YM, and you'd be doing only one contract, so a 0.1% move would get you $163.70. So that's one way of evaluating, I guess, how many contracts you'd like to do. A lot of people have many reasons of really when to exit. This is just one example. If you know your goal was to exit at 0.1%. Anyway, hope that little exercise that I did there is very helpful for you to understand really what each contract costs as far as margin costs, the commissions, and the fees itself, and how this affects what your net profit is after commissions and fees. And I know I just focus on the MYM and the YM here because that's what I'm trading. But on this chart, I also drew out, you know, what it would cost to trade the ES and the NASDAQ itself. And let me just do that same practice also for the ES. 0.1% is 4 points. So 4 points would essentially get you $10.56. And if you were trading 16 MES, again, that's based on the cash that I have. And if I was trading just one ES, that would give me $43.70 for that 4-point move. So you can see that big of a difference between the two there. And then for the NASDAQ, for a 0.1% move, that's about 14.3 points. And essentially, with the cash that I have, I'm only able to afford 11 MNQ or 1 NQ. So for 14 points, basically, you'd be able to make $29.26 for 11 contracts of the MNQ, and basically $63.70 for one contract of the NQ. Anyway, I hope I broke that down pretty well for you. I hope that was helpful and you enjoyed that information. I really emphasize understanding all these numbers before trading futures. Well, I hope you enjoyed the content that I shared with you today. I do appreciate it if you smash that like button or subscribe if you enjoyed the content. But if not, please give me another chance and hopefully you'll learn something on the next content. All right. See you in the next one.